You know what time it is. Good morning, everybody. Welcome to the morning show. Stock Market TV. Spencer, JC, Steve, Rick with you this morning. Much to discuss today. I know everyone wants to talk Palantir. We will talk Palantir, I promise. Maybe we'll talk about PayPal, maybe some AMD, maybe some India, South Korea. I don't know. It's anyone's guess what happens on the morning show. I can tell you who will join us today. We'll have Kenny Glick, we'll have Todd Sohn, and Phil Perlman in the house. So much to do. Are we ready? Chat Teradyne? Sure, we can talk Teradyne. Why not? It's up a lot today. Are we ready? Everyone? Yes? Good? On we go. Where are the guys? Are they here? Bring them out, bring them out.
All right. Good morning, everybody. Good morning.
Good
Good morning.
Good morning.
You know, I got to tell you, isn't it nice to wake up in the morning and not know what's going to happen that day? You know what I mean? Like a lot of people live in a very Groundhog Day world where it's the same thing over and over again. We know for a fact that we have no idea what's going to happen. You wake up in the morning, anything could have happened overnight. Usually nothing happened, but sometimes, right? And then throughout the day, you don't know at night what you're going to be feeling like, what's going to happen. It's fascinating. Really fascinating.
I believe life is about balance. I like spontaneity within a known framework. For example, I know for a fact that in an hour, the markets will open. And I have that to hang my hat on. I can hang my hat on the markets closing at 4. I know those things will happen, right? What happens in between is anyone's guess. I know I have a couple meetings today, but outside of that, it's anyone's guess, right?
No, I like how you said that. There's a certain framework, a certain structure. Like there's an order to the chaos.
Right.
Like at 9:30, the bell rings, even though it's kind of already been open. But we still play the game, and then there's another bell that goes off at 4:00. My wife asked me the other day. She's like, "What is that noise?" I'm like, what do you mean? What is that noise? How long have we been together that you still don't know? She's like, is that the market closing? Right? Like it's like, I'm like, where have you been? What do you mean what is that noise? The ding, ding, ding. My computer does that at 9:30 and at 4. Does yours?
Yes.
Yeah. What about you, Strazza?
My TV does it.
Your TV does it? Oh, you're one of those. That's crazy. I have the most important chart in the world today.
No, you can't say that every day.
No. You guys, hold on. Strazza doesn't disagree with me when I bring it up, and he's like, "Yeah, it's pretty good, right? Am I wrong?"
I think it's the dollar index for this week.
I got the chart for you. You're not too far off there, Strazza, but I do have the chart. And I challenge you guys in the chat to tell me I'm wrong, that this is not the most important chart in the world. That's why I do this. I want the feedback. Is this not? I think it really is. Can we just go right to it and then we'll do the state of the markets? You want to do that?
Wait, no. Wait, can we guess what it is first? I don't even know what it is. I don't even see the charts in the thing. So the
throw up slide 2. Throw up slide 2.
Where are the slides? I don't even see them.
Throw up slide 2. Is
it related to?
Strazza's not far off.
Too late. Forget it. Okay.
Come on.
Fine.
Come on. Tell me how many times you could say all-time highs and emerging markets in the same sentence. How many times do you say that? I never say that. No, nobody says that. But today we're saying that.
This is the first.
It's a big base. The problem with this being the most important chart in the world is a lot of people are not allocated to emerging markets at all. So that would be my pushback.
You want to hear? Doesn't that make it all that much more important? The mispositioning. Can I reiterate just how mispositioned this market is? Are you ready for this? All right.
I don't think we need stats to know, but sure.
It's worse than you think. It's worse than you think. Because here's what we're talking about. In the United States, Strazza is talking about American investors. American investors just don't have exposure to foreign stocks, right, Strazza?
Yeah.
Okay. Foreign investors have the highest exposure to U.S. and the least amount of exposure to their own stock markets since actually just broke out higher than the peak in the 1960s. So this is the most stretched ever. The international investors and their lack of positioning outside the United States, they're all piled into the United States. Americans are doing the same thing. Boy, oh boy, the setup. Boy, oh boy, the setup.
That can't possibly apply to every country in the world, but
Taiwan, Japan, there's some that have been working for a long time.
Yep.
Strazza, you want to argue that this is up there? Got to be up there.
I'm laughing at the chat. It's so good. It's a great chart, JC. It's a big base. We love these international bases. We called this breakout 2.5 years ago. It was a positioning and sentiment story just as the trend was reversing. So I love to see it happen, and I don't think it's done yet.
You know why I don't think it's done? You know what almost a third of the entire index is? Next chart, my good man. Now, Strazza is going to like this one. See how you give one to him, you know.
This is going to be China.
Is it ex-China?
Holdings.
China.
Go up the next chart, please. This one's for Strazza. So this represents approximately 27%. Go up to Shanghai. This is approximately 27%, a little bit more than that of the emerging market ETF is, which is the MSCI index, is what that ETF represents, and China's a big portion of that. So tell me now. Is like, now this is a chart. Now this is the chart that you want.
Well, I would say, and then even more importantly, and first of all, it's been a shitty 3 days for China. It looks like another one underway here today. But even more importantly, for U.S. dollar-based investors, you have brand new, fresh trend reversals in the U.S. dollar-denominated ETFs. KWEB, CQQQ, FXI, MCHI. They're all just banging out fresh new bull markets. Really just clean reversals. So love to see it. I think we're still in the early stages here. And that's not something that you could say about the domestic market. I don't think we're in the early innings at all. I think it's hard to paint a picture that we're anywhere in front of 6th, 7th inning here in the United
Throw up
States.
slides 7 and 8 and tell me that you think that. Throw up slides. What slide is that? Slide 8. Slide 8. Throw that up. So you say there's no way you could say that we're still in the early innings in the United States, right?
No, we're not. Definitely not.
And what about this guy right here? Give it to him. Give it to him. Give it
Small
to him.
caps just breaking out. Yeah, I had a feeling. Yeah, about time. About time. Better late than never, right?
All right. So this looks like the end or the beginning. So here, what we're looking at,
It's not
guys,
the
we're looking
beginning
at
of a bull
small cap.
market.
This is the small cap Russell 2000 growth index at the top, small cap Russell 2000 value index at the bottom. So this is all the Russell 2000 split up between growth and value.
Yeah.
And then simultaneously, they're breaking out of a 4-year, 5-year base to new all-time highs. And I'm being told that there's no way that it could be the beginning in the United States, that it's, later innings.
Just because small caps sucked and went sideways for 5 years doesn't mean that we get to restart the bull market just because they're joining.
Same. Just throwing it out there. Just throwing it out there. What do you say? What do you say we do a little state of the markets and dive into it? Huh? There's things moving. I don't know if you heard. The market's open. 9:30 today, I heard.
Yeah, moving.
I heard that too.
9:30. All right, guys, we got the Dow doing nothing this morning. Nice little nothing burgers, 0.0 for the Dow, 49,510. Do I have that right? Yeah, look at that, 49,510 for the Dow Jones Industrial Average. And for those keeping score at home, yes, that's right. That's less than 500 points away from Dow 50,000. How about that? Putting in a stick yesterday. We got the S&P. I had to double take there. You saw me lean in and see, am I reading that right? Are we that close to 50,000? As a matter of fact, we are. S&P 500 futures holding that 7,000 level, 7,016 today. Like that 7,000 is a big one in my opinion. NASDAQ 100 up 0.5%, just under 26,000. 30-year bond futures down 1/3%, 114 and change. Crude oil up almost a full percent, Freudian slip there. 62.68, 162. Yeah, maybe one day. 62.68 for crude oil, up almost a 4%. Copper up 4%. 607, back above 6 for copper. Gold up 6.7%. 49.66. Tried to climb into that 5,000 once again. Silver having a day. I was told yesterday that was it. I guess it's not. With silver up 15% this morning. That's right. 15%, 88.76. What a move in silver with the VIX. VIX still at 16. Got hit pretty hard, real hard yesterday, right? I mean, this thing got smoked yesterday, the VIX. Wow. Look at that move in the VIX. From 20 yesterday down towards 16. Man, that was some move in the VIX. And I'm not like Mr. VIX guy, but that is, you got to pay attention to that. You got Bitcoin, 78,230, down 400 points on the day. Whoop. What did I just do? So I guess we'll just do this one by one. So then Ethereum's up 4%. Do I have that right?
No, you do
not. No, Ethereum's down 1%. 2,300 for Ethereum. We got Solana. Solana 103, down 1.4%. Total crypto market cap. Spencer Israel 2.61 trillion. What stands out? Silver, right? Obviously.
I guess. Yeah.
Yes. 15%. Yeah. Are you not entertained?
Yeah.
Are you not entertained? Which, this is just further reiterates, that the biggest market crashes.
The best days happen.
The best days happen during the worst times. So if you go to the Stock Traders Almanac, big shout out to Jeff Hirsch, and you go to the end.
Yeah.
Right? Like the last pages at the end of the book, it tells you, like, look, the worst quarter, percentage point, right? So worst quarter, worst month, worst weeks ever. Right? Best, also the best. And what you'll find is that the best ones, best days, best weeks happen in the most volatile times. Like the best and the worst, you'll see the same years in all those categories. Right? So shout out to Jeff Hirsch. I love that he does that.
Yeah. Whitesell talked about this on his show a couple weeks ago. You always see those like hypothetical studies where like how much you would have missed out on if you miss the best day. If you just miss the best day, or even if you miss the worst day, how much better off you'd be. But what they don't tell you is that the best day and the worst day are adjacent. So you really can't miss the best day and not also miss the worst day, right? It would be impossible. It's purely theoretical. It'd be impossible to have one and not have the other because they are so close together. So anyway, just to your point. Okay, let's talk about Palantir. This is one of the this is probably the story of the morning. The top of my scanners this morning is just a bunch of the Palantir leveraged instruments. But Palantir is up 12, call it 11.8% right now. Earnings growth continues to be the story. This company is growing overall revenue at 70% year-over-year growth, which is pretty wild. They guided for 61% revenue growth for the current year. The numbers came in above estimates. The reaction is positive. That's the story. That's the story here.
So this was an incredible report. Once again, this is still the most exciting company in the market. No one is growing like this. I mean, you can't grow your revenues at 100% forever, but Palantir, to be this late in the game, it's been a couple years now, still now guiding to do over 60% in this coming year is ridiculous. These numbers are getting very large. They're going to be 10, 20 billion before you know it in top line. They're dropping a whole lot of it down to the earnings line too. The one problem with this report, best report, once again, best report of the season. I don't think anybody beats this. It's been the case for a long time now. Stock would have been up 20, 30% on this a year or two ago. Yesterday, when this all hit the wire, stock was up like 6%. The initial reaction, 6-7%. I think we're at 10 or 11 now. But it's still overall a pretty muted reaction to what was just a ridiculously good report. So we'll see if you get that post-earnings drift. I think you probably do. For now, we're failing at top, rebounding off of a big level. Ended up being, gave you a nice entry here past couple of sessions. Right against this neckline, you could draw just a straight line right here around 150. Boom. So I think Palantir is at new record high soon because money's going to keep flowing into the stock. Nobody is growing the way they are right now.
Guys, can you throw up the new? Can you throw up the new slide too there? Because I think I have exactly what this. I mean, it's just so clean. It's the same chart, just kind of annotated a little bit different. I mean, we talk about these patterns again and again and again. Like these tops, these head and shoulders tops are never that, right? Like we're all seeing the same thing. Here internally, we're seeing the same thing. Go back to the other chart. Let's show the other chart. Go show that. I love how you're using the green arcs, right? I mean, that is just well done. This one here, in theory, this is a bearish head and shoulders pattern. But I love how this is annotated with the green arches, because if this is not a massive top, I don't know if there is a pattern in the market that is more bullish than a head and shoulders top not completing. Strazza? Is there anything?
Sorry.
Right?
It's a fantastic chart, JC. It's a continuation pattern. Things gone sideways since back half of last year. So I just think this is a beautiful little digestion before the next leg higher. But I'll say again, don't love the way the market is reacting to what should be a 25% up kind of report.
So this is the first good news in software, and if this doesn't stick and it starts melting throughout the day, oh my God.
This says absolutely nothing about software, right? Because this is not a part. Yeah. This is an AI stock. This is not a part of the AI is eating software. This is AI. It just happens to also be software, which, by the way, part of the reason why this whole narrative is so absurd, it's just so absolutely ridiculous what's going on with software right now. There's a very blurred line between software and AI. When we're killing some stocks because they're software, they're going to end up being AI soon. So it's just fucking stupid. But Palantir is different. They have no competitor. There's nobody like them. Right? It's a totally unique business. And there's no way it gets eaten by AI because it's driven by the best AI in the world. Feel me?
Yeah,
no,
I don't know. Here, why don't we I don't
Tell
know
him,
about
chat.
that.
He doesn't think Palantir is an AI stock.
No, throw up. I don't know anything, dude. I don't know anything. I'm just following price and throw up slides.
Diminishing return. They're growing the top line at 60%.
I mean, it's
holy cow.
Yeah, I don't know about any of those things, but I can't tell you that Palantir. I mean, when I think markets from a top-down perspective, and I think software, I think Palantir right up in there. You got Salesforce, Microsoft, Oracle, Adobe, right? ServiceNow. Like those are the names I think about. Palantir is right there at the top. Certainly a bellwether of the space. In my opinion, I don't know anything about AI or software. I don't know the fucking difference, man. All I'm telling you is the way these things behave. Palantir has been trading with software. And what I'm telling you, in my opinion, as somebody who knows a lot of indexes, is that Palantir sticks this. And I think that is step one to software recovering. This thing melts today, and this thing has a nasty candle and rolls over. This software crash is going, man. This is very important.
How you want to think about it, but it doesn't matter.
All right, that's how I'm thinking about it. What do you guys think, Chad? Am I crazy?
Crazy. Read it. So I think that Palantir does not compete with the government. The government cannot compete with them. The government just pays them. There really, truly is no competitor. And right now, it's less about the government contracts and more about, I mean, every S&P 500 company in the world is going to be a customer of Palantir, and they're not yet. Right? It's the runway for the growth there is just insane. It's really, really wild. So this one, like, if the market stops rewarding Palantir, it's not about software. It's the whole market's fucked at that point. There's nothing better than this. You can't do better. A company can't do better than this. So if this doesn't get rewarded, what's gonna? That's a problem for all stocks, not just software stocks, in my opinion.
That's a great point. That's a great point. Oh, I like that because it was that good, right? Everybody keeps talking about how this is the greatest quarter ever. You just said that it's the winner of earnings season. Nobody's even going to come close. Can you explain to me, who knows? I don't know anything about this stuff. And by the way, throw up the link to the beat report if you're interested in learning about this stuff like me. Strazza does a great job. But can you explain to me, if you put that in the chat, can you explain to me why? What was so good about it? Why is everybody like, oh my God, it's the greatest ever?
It just grew revenues for the last year at 70%, and now in this coming year, there's still.
Is that a lot? Like for me, it's a denominator fallacy.
People trip over the Mag 7s, JC, for 20, 30%, right? These guys are out.
Yeah, but this is a lot smaller. This is a lot smaller company.
But I mean, it's well on its way at this point. I mean, what, they're going to be close to 10 billion in revenue. What do they put out for the next year, Spencer? Like 8 or something. So they're getting big fast. I mean, I remember.
It actually is a $350 billion company, Palantir, right now. So that's not small.
They're in.
Does that put it
they're
top
in like
25?
the Mag 7 mentions? You know what I mean? Like they're the next Mag 7s, right? Like it's one of those for sure.
Nice.
But no, it's just growing still the way they are is bonkers. And it's not just that, but they upped their guidance by like $1 billion, right? Which is like that, like
number 24. Number 24 coming into today in the S&P 500 market cap size. So what did I say? Top 25? That was a pretty good guess.
But it's really that they guided like 15 to 20% above where the street had them, what they were supposed to do this year. So they're just coming out and just shocking the street with every next earnings report. They're kind of in that phase still, and it's showing no signs of slowing here.
Yeah, JC, Palantir IPO'd, late 2020. At the time, they're doing $300 million in revenue a quarter. They just did almost 1.5 billion last quarter, right? So, and as you said, Palantir ain't that small, right? It is small compared to the Mag 7, sure, but ain't that small.
No, these are big numbers.
Listen, $350 billion in market capitalization, $350 billion. That's real. That's a lot.
I mean, there's still a valuation problem there.
This is a $1 trillion company there, Strazza?
What's the math there? 40 times sales still?
3x from here in price.
Yeah, it'll happen. Probably not this cycle. Again, this is the most expensive company in the market, but you don't want to. Yeah.
Is it one of those PE ratio things?
It's very high.
So this is the highest multiple?
It's crazy town. This is like Amazon.
And it's a multiple to what? Earnings or revenues or both?
I'm talking about price to sales because that's just a wild number. But you don't want to play that game with a stock like Palantir, right? Every investor in the world has fallen into this trap of calling the best stock in the market too expensive. You never want to do that, right? The best stock in the market,
like Tesla, Nvidia, all these things, right? Well, not Nvidia.
If you want to dabble in the best stocks in the market, you're a price taker. You don't sit there and argue about the valuation that the market's putting on it, right? You don't fight that, okay? Because what it becomes is a very rare asset, and the valuation will get crazy, especially in bubble periods, because there's just a lot of money looking to flow in. Names like that.
Chat saying multiple $1 trillion company. They're saying in the chat. Yeah, why not?
I think it will be.
Yeah, I'm in. I don't care.
I think one day, again, the runway here, they're just getting started. That's the really.
See, Jay Hampton said Palantir's a meme stock. See, you get both sides, right? And I like that. The best companies in the world that the haters are hating on hard, and there's politics involved too.
You know what, JC?
It's not a meme stock anymore by any definition of that phrase. It used to be.
I will put this in a language that you will understand. Okay. You don't want to complain that the Wagyu is $150 for a steak. Okay.
Buy it.
You just buy it because you know it's the best.
He's right.
Okay.
It's a good one. A great analogy.
$150 for the Wagyu, man. You're going to bougie
I don't
places.
know. Just pull the number at it wherever. But you get my point.
Listen,
right?
And I
finishing a nice omakase with some meat, really finishes it for me. If there's no meat towards the end, I kind of feel like, not fully fulfilled. You got to get that meat in there.
I got an
right?
Australian.
Well done. Let's bring in Kenny.
I got an Australian Wagyu Denver ready to go tonight. We're gonna do it on the hot stone.
I don't know how I feel
Denver's
about
good, dude. Don't be crazy. Ooh, Denver's a sleeper. Underrated.
I know.
Like me, a good Denver.
I'm with Andrew. I'll also take the skirt. Okay, here we go. Kenny, where's he at?
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
There he is. What's up, Mr. Kenny Glick? How are you, sir?
Meat was my porn name in '87.
Nice, dude. I mean, I can't even imagine Kenny in the '80s. I didn't meet you till the aughts,
Yeah, odds. Yes. And if you Google the Hebrew Hammer, that was me too. Hebrew Hammer number 5. That was when I shined.
Nice.
Yes.
One of my buddies wanted to be in the WWE. His brother was Conan. Remember Conan from NWO, Black and White? Conan, he had the Tequila Sunrise was his move. Remember? So his brother was Conan. So he wanted to be in the WWE. But he's Jewish, so he was going to be the heavy Hebrew.
Nice.
Heavy Hebrew. He was the only Jewish kid in our school. He was the man. He was one of our best friends.
Right.
Shout out Richard.
Like that pamphlet we got handed when we were a kid. Famous Jewish athletes. Here, you want some light reading?
Don't be hating on Rod Carew. Come on.
Kenny.
Rod Carew. Nice.
Kenny, we buying the PayPal dip today or what?
Listen, let's talk about PayPal. No, PayPal is one thing. Yeah. I mean, could everybody get a stock wrong? I mean, everybody was bullish that at one point. I was bullish. I mean, I thought they were a monopoly. Why not own the stock? Again, Warren Buffett let me down. Buy what I know. That one didn't work out for me either. But everybody got this wrong. Now I think it's at 10-year lows. So
yeah, close to it.
I got to look for a thing to get to, maybe even under 40. But let's talk more about Palantir. Palantir will not be a publicly traded company within the next couple of years. Not only do they have government contracts, they are going to be owned by the United States government. And they're going to
think so?
I believe they will go fully clandestine within the next 5 years. They will be taken private. They're too valuable to the United States government, and they will be taken private.
Wow. At a premium, probably, right?
At a massive premium of $375 a share. Cheers.
$375 a share?
That's not the worst take. Yeah, it's not the worst take.
That's only a double from here.
Yeah.
Just only a double.
Being modest.
We're talking triple. We're talking about a trilly. Give me a trillion.
We just said $100 billion.
They're going to sell out. They're going to be forced to sell out, actually. They'll be taken.
They're going to make them an offer they can't refuse.
I know. Okay. No. Here's what's going to happen. You're going to take on the one hand, the XAI, SpaceX, Tesla, three-headed monster on the one hand. Palantir on the other hand. Bring them all together. Palantir, Tesla, XAI, SpaceX.
You just summed up my entire portfolio and Rambus, because those are the only 3 stocks that I like right now on the planet. And I'm loving Rambus that it crashed again on earnings, and this is why I don't own stocks going into reports. My God, every time Rambus reports, it gets slammed, and then you just buy it the next day. So we broke all-time highs on Rambus, and what did that get us? It got us 3 upgrades, and that's why it was time to sell. Because once the analysts start getting involved, it's usually a top. And again, we have an analyst that we do like because he doesn't post on Yahoo Finance or on Thinkorswim or go on CNBC. He's actually getting paid for his expertise, and he's in the shadows. We're going to talk more about that at the schmooze. Hopefully you guys were at the schmooze. But yeah, I mean, PayPal, just awful. Rambus right now. But again, I'm looking to short.
What does Rambus do? What, as somebody, you're the only person that I know that trades this thing.
Rambus?
Rambus. What? Yeah. What is you even? I know it's been around for a zillion years. I know it's
They're
technology.
like the illegitimate stepchild of MU and Snail Dick, or SNDK for you kids.
Oh, it's a semiconductor. I wouldn't have guessed that.
They have licensing agreements from the aughts, if you will. If y'all like bring that back, it's a callback. They have licensing agreements with MU and a couple other companies, and it came out of the Andy Dufresne. It was one of the best Andy Dufresne's. That and AMD were kind of like linked together for me because I've been around for 30 years. AMD obviously outshined Rambus, but Rambus just got to all-time highs, 27-year highs just last week. So it's just a very difficult stock to trade. That's why we don't talk about it too much. The options are illiquid, the stock's illiquid. But now today we'll look at it, and again, the bounce. I was hoping to see this thing get washed out to 88 and pick it up. But, we'll see. We'll keep an eye on it. But I actually am going to look for a reason to buy PayPal. But we're talking to some weird names today. PayPal, Pfizer. Looking at Pfizer today. We're looking at Pepsi. These are companies.
Pfizer or Pfizer?
Pfizer. No, Pfizer. The boner.
Pfizer.
Yeah. So again,
it's confusing. Pfizer.
Yeah. Salsa. Oh, salsa.
Fuck you.
By salsa. Oh, man. So here's Pfizer. I like when the stock reports earnings, staying under.
Wait, I can't see it. I can't see it.
Hold on a second. And again, it doesn't have to be a hero trade like Disney yesterday. I never trade Disney, but yesterday you waited, and you got paid. So I'll wait for the Pfizer. So right now, any stock that's under VWAP predominantly the whole morning, it's an easy setup because now it's topped out 4 or 5 different times, and that is the VWAP. So if it doesn't break there, you probably get your 30 or 40 cents out of it. And as a day trader, you're doing 1,000 shares, you make $300, $400 sitting on your ass. That's what we do for a living. So, I'll keep an eye on the Pfizer. And then you got Pepsi. Already had the good move, but this is the 1-minute multi-day VWAP reversal. It's already happened. So now I look to take the other side if the profit takers show up. So I'm looking at it because the easy money's already been made, obviously. 1-minute multi-day VWAP reversal. Trade hasn't failed in 4 years. But now I look to take the other side of the trade. But again, I don't trade what I think, or I would have been crushed yesterday. Because I thought there was this, I thought crash was on the table yesterday, and the overnight action was pretty good. But then, considering I don't sleep at 3 o'clock in the morning, I woke up to check, and the future started to recover. I had to cover my short, and I'm just sad about not going long. I just cannot believe that the Qs just rallied 20 points like it's a penny stock. You cannot stay short the Qs for any extended period of time. But going back to what we're looking at right here, I have to look at PayPal for, a possible buy today, considering everybody's hating on it now. It's at 10-year lows. Give me 2 points on it. Let me make something on it. So, again, I'm going to wait to see if it get washed out down to 40, and then we'll plot our attack. And that's kind of what we do. We're stalking, we're hunting, we're going fishing, and we'll just wait for the setup to give us the idea, and then we'll strike when the iron's hot.
I had a high school chemistry class with the Pepsi girl. Do you remember her from the commercials?
Which Pepsi girl?
The adorable little, little girl
wow,
who was in the Pepsi commercials. Yep, she's from our town, and we had. So if I had just bought Pepsi, then I would only be up 100% in 20 years. So hey, what are you gonna do? Plus dividends.
Speaking of that, man, since the silver crash, I mean, it's amazing how many Bitcoiners are ripping on the silver people as if we just bought silver at 120. So and guys, if you follow me on Twitter, I'm coming after all these Bitcoin people. By the way, Bitcoin to 50,000, then 20, then 8,000. I'll see you there. And then everyone's going to pile back into silver. Silver's not going. Gold's not going anywhere.
What did Bitcoin ever do to you?
Why are you such a hater on Bitcoin? So just because silver's up 13% today and you're back? Are you back?
I need to have this conversation out loud. I am not a hater of Bitcoin. I'm now a hater of Bitcoin because everyone's coming at the silver people. So I'm defending the honor of the silver people that have been doing it.
I see. You're not actually shorting Bitcoin. You're just defending their honor.
I'm defending the silver honor. And I'm also saying, listen, when I have silver in my hand, when I have my coins and my bullion and all my things, and I can look at it and hug it and kiss it, right? What do you got? You got a bunch of code on a screen that you're hoping that somebody comes along and buys your Ponzi scheme. That's what you got. You got nothing but code. Congratulations.
All right. So your rock is better than the code.
That's right. That's right.
Why are you taking this out on Bitcoin? These two assets have nothing to do with each other.
Also true.
Because the Bitcoin people came at the silver people on the internet, and I'm there. I'm there to protect us all. But really,
because the silver people are such nice, innocent souls. They have no anger or aggression whatsoever.
I'm not the doomsday guy, silver, because if the world comes to an end, we got 3 days. Do you want to live through the Armageddon? I got enough stuff in the house I could go for 2 weeks. Then what? I'm going to eat my wife? All right, on that note, see ya. No, but seriously, the doomsday people that say that when the electricity goes off, your coin's not going to be worth anything. Nothing's going to be worth anything. 3 days you got. 3 days until we all start going cannibal.
Kenny Glick is not just, the grandfather of day trading, the Hebrew hammer, the guy you want to be trading with during the day, but his conspiracy theory game is also on point, right? A man of many talents, talents.
That's why if you don't have ammunition and food and boomsticks, then you really got nothing. So, I mean,
do I really want to live in a world like that anyway? Whatever.
You're right. You're talking like my wife. She's like, do you really want to have to defend the house? You want me on the roof with the red dot? I'm like, for the first couple of days, yeah. Let's see what happens. We got that capability. I'm out there on the range with my wife, showing her how to use the site. I'm like, you got to zero in, honey. You got to zero in. She's breaking her shoulder trying to shoot this stuff. Oh, it's just a mess. But
dude, you should hear me explain to my wife and my mother-in-law where the keys are to our wallets and whatnot, and how to find them. Yeah. Oh my God.
Yeah.
Because they imagine, right? Something happens to me, they got to know how to get that.
But going back to that, if there was only one, I believe the blockchain. I believe in technology. I'm not a delusional, crazy bear guy, right? I believe in all that stuff, but get rid of the 2.7 trillion fake other stuff that has been created over the last 3 years. Make
There's
one
only going to be more of it, Kenny. You better get used to it, buddy.
Save us all. Oh, sorry, 2 coins. The Hit the Bitcoin is going to come out this Christmas. 2 coins, Bitcoin and HTB coin. Let's go. All right.
Kenny Glick, ladies and gentlemen. Go join him. Go put on a trade with Kenny.
Just make money so you can buy goods and services. That's what you need. All right. Good luck, everybody.
Adios. Oh, man. You can't make this up. You can't. I mean, this is real life, guys. Real life. Real conversations with real people. Boots on the ground. Boots on the ground, Mr. Strazza. I like your flannel. You going hunting down there in Florida or what?
Pretty sure this is from Walmart.
Perfect.
Right?
Where else would it be from?
Yeah, I don't know.
Isn't that where you buy flannels? I don't know.
That's where I buy flannels, I guess.
We got Todd in the house. Bring him out. Bring him out. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Todd Sohn, sir.
Hey, wasabi.
Listen, the kids these days don't understand that reference, right? So you're gonna have to explain. Can you do what comes next?
What's up?
What's up?
What's up?
Right? We could do this all night. We're gonna spare you guys. We're gonna spare you guys. Listen, all business. Forget the pleasantries. Everybody knows you're the man. Yeah, we're friends, all that stuff. Great. I want to know about the positioning internationally. Americans don't own international stocks. They touched that stove too many times, Todd. Too many times over the years. They wanted to rotate into the international, and they were penalized every time for a long, long, long time. The boy cried wolf too many times. I ain't going back to that. I'm going to buy good old American stocks, USA, right? And then the foreign investors, same thing. We don't want to buy. Our stocks suck. We want the American ones, right? Talk to me about what the ETF landscape looks like from a global stock market positioning versus US.
Yeah.
I want to hear it from you. What's going on?
So, well, there's two ways to look at it, right? There was one is just the pure weight of global funds, right? That's kind of the simple, and that's more just relative performance momentum. US is 62% of the ACWI, which is immensely still elevated if you ask me.
62 is too much. 62% of the all country world index is US.
It was coming out of the financial crisis. It was in the 40s, I think. Okay, so I mean, listen, it's not wrong. It's not bad. It's been beneficial. That's where the strength is.
If you didn't know that number, Todd, and I know you do and I do because this is what we do, but if you didn't know that number and you just had to guess, like, isn't that about right? 60%?
60 feels more right. When it was 70, was that like a year and a half, 2 years ago?
Was it 70 a year and a half ago?
It got close to 70, I think. And that was like, okay, it's a little overboard. Now, that's one way.
So understand, if you're at home, what we're talking about here is very simply, when you look at all of the stocks and the value of all the stocks in the entire world, right? 70% of that entire pie was just the United States of America. Todd is saying that was a bit much. And it was in the 40s, 15 years ago. Now it's 62. Still elevated is what you're saying. I don't disagree with that.
Even if you drill down from there, so like let's start. There's the world. All right, I got 62% US. Then I have S&P 500, which the bulk of the US is technology. Then I got large cap growth because I probably have growth in my portfolio. That's more technology. You're just adding on ice cream to the plate, which, listen, I love ice cream, but that's a lot of ice. You're gonna get a stomach ache. So it's too much of a good thing while all this other stuff and opportunities are going on. And so in terms of what's happening now in terms of the flows, is you're seeing this big rush back into specifically emerging markets. Massive
new all-time highs, highest monthly close ever for EM.
EM might be back amazingly. And what's nice, I know my headset sucks. One day we're gonna fix it. EM, what's nice about it is it's far more balanced now, right? It was China 4-5 years ago. It was a China index. Now you got Korea in there. India has been a little bit of a mess.
Throw up Korea. Can you guys throw up Korea? I brought it
I
with
don't.
me. Slide
I mean,
6.
the Korea is nuts.
Korea's.
I'm a big fan. I'm a big fan of KDEF, it's Korean Defense.
Yep.
The newer
That ticker
ETF.
symbol keeps coming up. Yeah.
Yeah,
South Korea, the Kospi is up 7% this morning.
The only problem with this chart to me is it's like 50% above a 200-day. I mean, that's massive for any market out there. You know what I mean?
Throw up the next chart. You know, you're just seeing it across Southeast Asia in general. Throw up the one right under this.
Yeah, even
right
the
now
smaller,
we're looking more developed markets here.
So there's this kind of normalization going on of positioning back into EM after a rough decade. A lot of folks, maybe it's chasing. I don't know. But it's very interesting to me. So you're seeing investors surround the U.S. now. They're getting back into Europe. They're getting back into EM. But Japan, I still really like. I don't think they're really wholesale moving back there. I think there's a lot of skepticism.
I mean, we're just now breaking out of that 1989 base, Todd. I mean, early innings or no?
I think so. Inevitably, the question comes up in a lot of the meetings: do you buy it hedged or unhedged? I think you just do half-half. I would probably talk about this before.
Japan.
Yeah. Half and half, 50-50. Take the FX out of it. Unless you have such a gut feeling on the direction of the currency.
No, because you're seeing DXJ and EWJ are both making all-time highs. So it's not the currency situation, it's the numerator, it's the stocks. But my question is Japan, is it the story about industrials strength?
Oh, yeah, totally.
Because you're seeing new all-time highs in U.S. industrials, new all-time highs in small cap industrials, new all-time highs in small cap industrials relative to small caps. I mean, equally weighted industrials hitting new highs against equally weighted S&Ps. And then Japan is how much industrials? A ton, right?
It's a good chunk. And then don't forget the financials there.
Right.
Are also really crushing it. So that's a pretty good mix. And then you got, you have the autos, which are whatever. Stuff like Nintendo, right?
Again, 24% industrials in Japan, 17% tech, 17% financials.
Like that's a pretty good mix. If I'm looking at
quarter
just
of Japan is industrials, bro.
Yeah, well, you think about the U.S. U.S. is a third tech, and then communications.
Right.
And
that's discretionary. You got Tesla and Amazon in the discretionary.
Yeah, it's just not like. Listen, it's a great index. It's one of the goats, but it's very imbalanced now. Whereas I look at Japan, I'm like, that's a nice playing field. That's 3 guys scoring 20 a game. You know what I mean? Rather than 1 guy scoring 30. The Heatles.
I see what you did there.
That's the Heatles, right? Japan's the Heatles.
How about those Knicks, Strazza's on drugs. He thinks they're going to win the NBA Finals.
No. They're not even going to make it.
Okay, so tell me about this positioning, though. You think that, so we know that these trends are changing and EM might be back, new all-time highs. You don't think about it like this. Think about your behavior, Todd. How many times throughout your career have you said emerging markets and all-time highs in the same sentence?
No, it's been a long time. I mean, well, 2021, did it hit one? But it was like brief, right?
For like a hot second. Transports did it too. Transports just closing all-time highs. That's not something that you see very often.
Yeah, it was the big fake out. And now I just think you're seeing this massive rush. Whatever the catalyst is, whether it's AI derivatives or demographics, you pick a reason, right? It doesn't matter. People are reallocating there like crazy after years of being underweight. And that takes a long time to, I think, normalize. Yeah, you can hit a speed bump in the near term. People get a little too enthusiastic, but this is like a structural thing that's going on here.
Yeah, that's really what it is. When you see these trends, in my opinion, they last for a long time. These are not like little blips along the road, but these are massive, massive trends. So does it have to be 8, 10, 15 years of international outperformance? Does it have to be like that, like it usually is?
It's
not
possible.
Necessarily, but just more than 1 year. Is that too much to ask? Maybe 3 years?
Yeah, it's possible. I just think like you have to have exposure now after maybe not having exposure.
But that's that touched the stove too many times, Todd. That. These humans are crazy, bro.
The stoves are ready. The stove's ready. We're in a different world
all right. Now. We're burying the lead here. Burying the lead. Let's talk metals. What the hell is going on, Todd?
I got my Metal Mania chart. Hulk Hogan and Ultimate Warrior, you know.
Metal Mania. Well done. Was that AI?
That was AI. I asked AI. I said, "Hey, make me the WrestleMania 6 logo, but call it Metal Mania."
And you didn't have like a copyright infringement?
Shh.
Because it tells me when I'm asking for something I can't ask
Yeah,
for.
yeah, it didn't say anything like that.
Oh, so it tells me, because my kids love superheroes and animals, so we make like Hulk dinosaurs and
You
Flash monkeys and all kinds of silly things. But it tells you that you can't do that, but it tells you how to ask it so that it's okay.
Yeah. I think that's
if you ask it like this,
So, and by the way, this is an old chart. The dollar value of this doubled last week when everything really topped out.
So 120 billion.
Yeah, it was something like that. It was some absurd number, and you're seeing it across the entire metals ETF spectrum, not just GLD, SLV. It's all like the random smaller silver products, platinum, palladium, leverage space. It's everywhere, and I don't know. Listen, that's not for me now. I think that was the crescendo, and you're seeing the implications of that now.
So we'll look back on that. That's going to be a major spike in the chart for a long, long time.
Yeah, it's just going to be a big freaking sticking point there. So like I don't know. Like if you were there, I think it's probably time to step aside.
Yeah.
Same thing with some of the names too. Like the names got very.
Unless you're looking for the volatility. I mean, it was up 15% this morning. Now it's down another couple percent, but
yeah, I mean, there are covered gold, metal covered call ETFs now, like gold covered calls. So you're gonna get massive premiums on that, which I think is kind of interesting.
So let's talk about we're talking standard deviations, we're talking Z-scores, we're doing fancy stuff here on the morning show. Fancy stuff. Looking at the lay of the land. Throw up that next chart there. This is really fancy what you're doing here. So explain.
Oh yeah.
Deviation is. What is a standard deviation?
How many Z-scores, how many standard deviations are you away from an average value?
How many sigmas?
How many sigmas? So, I just
all
did
the same thing,
right?
Here. It's all the same thing.
It's all the same thing. It's fancy math.
The Z-score is the quantitative measurement of how many standard deviations, which would equate how many sigmas. Do I have that right?
It's something like that.
How am I doing? How am I doing? Not bad?
Pretty good. But I always like running this because it gives you just a sense of what's super overbought, what's not overbought. I don't know what I'm blaming Spencer for this. I don't know why the chart looks a little jacked up. It's okay though. It's okay. All the metal stuff was run up. Not wanting to chase it. And meanwhile, I think it's interesting. At the bottom of the list was the Mag 7, low vol. I don't know what to make of bonds here. They just can't get their act together. But like, it's very possible Mag 7 makes a little comeback here. You're stuck.
We're seeing some of that. They better. And what about like the financials underperforming in January? Anything to worry about there?
I think too early.
Yeah. One down month, not the end of the world.
What kind of financials are we talking about? The big banks, or are we talking insurance, which is a
large cap financials? The outperformance out of Staples. 1 month doesn't make a trend.
Yeah. So I think there is a very low bar for low vol. And low vol is consumer staples. It's traditional utilities. It is insurance
too, right?
Some of the industrials, not the crazy AI related stuff. Low vol has been left behind. We can roll out all the statistics on midterm election years and February seasonals. And when I look at the flow data, there's been massive outflows from low vol products. Now there are different ETFs that can take allocations from that. That's a whole other story. But I just think if you're looking for something different, then staples, healthcare, utilities, all the stuff that's been forgotten over these last 3 to 4 years, you could talk me into them working at some point, right? I would not shy away from them.
Software's got to stop crashing.
Yeah, I mean, that was Microsoft.
Yeah, throw up that chart. He's got a great one, slide 27 there. These are the industry group weightings in the S&P 500. You're looking at semis, software, hardware. This is a great chart.
I love this chart. I mean, semis were 2%. We've talked about this before. Semis were 2% of the S&P a decade ago. software has always been around the top because of Microsoft and what Oracle I think is in there, and it's coming off the boil here, and semis are taking over the S&P. So, and you're seeing money come out of semi software ETFs. There's not that many of them, but that's kind of interesting what's going on. Software is the most hated area of tech. Say, okay, if you wanted to get opportunistic, you can start poking around there. It's just that I don't think the charts have set up yet. Maybe I'm wrong. But if you're looking for opportunity, I wonder if it starts there.
I got to see it. Keeps making new lows.
Yeah. Like if I'm just looking at a list of
Palantir, Strazza's telling me that Palantir is not a software stock, that it's its own thing because it's like so, unique or whatever. I don't know about all that. I look at it as a major bellwether software component.
It's a software stock, Steve.
Call me crazy. He talks to me like I'm crazy.
Florida's part of the U.S.
software. I think Palantir, Microsoft, Oracle, ServiceNow, Adobe, Salesforce, right?
By the way, I know this is a little bit of a left turn. There's a metals chart in that deck, industrial metals. You guys see that? I wanted to throw this one out to you. While we're on the topic of metals. Steve, industrial metals chart. Let's see if we can. Yeah, okay. This is up your alley. Because I know you like to find when funds liquidate and the moves take off.
Yeah.
Not a lot of industrial metal ETFs out there. DBB is one of them. That's kind of the remaining one. This was a industrial metals ETF, and it closed late last year. So I know you guys like these ones.
I mean, it's similar to the magazine sort of cover, right? Yeah. Because, by the time they figure out, what, we're just not making any money from this thing. Nobody cares. Nobody wants it. The reason they think that is because nobody cares and nobody wants it, which is in and of itself a reason to look harder to perhaps want it and own it. And then they just say, the hell with it. Get it out of there. Like so right before coal ripped, right?
Yeah, exactly. This is kind of interesting to me. I know the metals are a bit messy now after all the volatility, but just keep this one in the back of your mind. It's not a perfect one because it's futures based and all that. Like there's some fleas to it. But we were down an industrial metals ETF as that whole space might actually start to be coming back here.
All right, let's talk SpaceX. Let's talk SpaceX because I don't know anything about this stuff. Like, I know nothing about nothing. So throw up slide 33. I just am not, I'm not privy to this kind of information. This is a way above my pay grade, but I am generally curious because I wonder two things. Does this take money from the market, because it needs so much demand to buy a market cap like this? Or does this free up a lot of new wealth that could then be deployed into the market? Is this massive IPO coming a net positive or a net negative?
I don't know if it's about it. I don't have a good answer.
Yeah, but you're the person that would have the best answer that I know. So just tell me what you think.
Whenever this reminds me of like the this is massive company, the WeWork stuff. Whenever you get these massive IPOs, I don't think the track record is great for what it means for the market.
Since when though? Since when do you think that changed?
The last 25 years maybe.
Yeah. So the hot IPO thing was in the late 90s. Ever since then, it's been liquidity events for VCs.
Yeah. This is exactly what that is.
But doesn't that bring all this new money that could then be deployed into equities?
Oh, they go buy a yacht.
Yeah, but there's still a lot more left over after that.
They're buying a big yacht.
Fine, but there's still cash.
Buy one of those super yachts. I don't think so. I don't think it gets.
You don't think that money gets redeployed into equities?
No, it goes to another. It goes to the next unicorn.
Yeah, but they can only. There's not enough of those opportunities to be able to spend all that money. It's going to public markets, bro. No, I'm asking. I don't know.
It's going to Steve.
It's going to Steve.
Steve Strazza. I don't think so. I'm not there. What I do find interesting about this table is that the pricing of this thing is all over the place because it's a private company. So, but you're seeing it pop up in ETFs, right? Our guy Eric Balchunas has talked about this.
So the pricing is set in these different ETFs on what they think it's worth.
They acquire the shares on the secondary, and you're allowed to put these into an ETF to some extent. There's legal limits on the exposure because it's illiquid in a liquid wrapper, and then they're supposed to update it however often with a new mark. And so it's just funny that either in an ETF or in some of these mutual funds, the marks are stale. So now you have this pricing discrepancies. And then you have Forge and NASDAQ private market, which are kind of $80 apart. Those are supposed to be secondary markets for private assets. So I don't know. I don't know what this thing prices at. We got a guy saying Enron stuff. That could be fun. I don't know. I don't know what to make of it.
All right. Well, that's fair, right? That's fair. But I do like your perspective on how Balchunas is breaking down some of the the ETF components. I didn't realize that there was that angle. I'm just curious about whether it's a net positive or a net negative. I mean, I've heard both sides, and I'm just not, I don't understand this stuff enough to have an educated opinion.
I don't think I do either. Whenever I hear VC privates trying to unload stuff, the end result for the little guy is usually not very good.
Yeah, they got to hype it up so they get the most amount of money possible. They're talking their book.
Yeah, usually not great for the little guy. So I think that's kind of the view I'm taking it.
Yeah.
What's interesting, you're seeing some of these private.
You'll probably get an opportunity to buy it much cheaper, like a Meta sort of situation when Facebook went public.
Forget Meta. How about like eToro, Bullish, and Gemini? You want to talk about cheaper?
Yeah.
You can buy the Winklevi for half a Winklevi now.
You go. I see what you did there. Well done. Ladies and gentlemen, fan favorite, Mr. Todd Sohn. Thank you so much for dropping by. You are the man. Sorry for drilling you with questions, but when we got you here.
You're the best. I always enjoy this.
Oh, love it. Thank you, Todd.
I want you to give the ticker, SAMT, Strategist Thematic ETF. You got to look at that one.
The Thematic ETF, SAMT.
That's what you want.
Strategas Macro Thematic Opportunities ETF. Fancy
That's
name
what you
there.
want. That's what the people want. All right. Not that I'm trying to shove it down anyone's throat here, but you want Strategas. If you are not a Strategas client, right, on our research side, but you want to be like Strategas, you invest in that fund.
You got some serious assets in there, sir. Very nice. Well done.
We're working.
Pushing half a billy.
Half a billion. Yeah, we're working. We're trying our hardest.
Dude, congratulations. Well done, guys. Well done. So this is the Strategas Macro Thematic Opportunities ETF, ticker symbol SAMT. Check it out at the strategasetfs.com/SAMT.
Wow. Who's better than you?
Come on.
My hype man.
Come on. I'm like the Lil Jon of ETFs over here. What? All right.
Who's better than you guys?
See you, Todd. Thanks a lot.
Soon. Take care.
Adios.
Todd was at our little happy hour a couple of weeks ago.
Nice to see Todd. Fan favorite. I was drilling him with questions right off the bat. I get to talk to Todd. I want to hear what he thinks, because when we see him at a bar, like, we're not really talking about ETF flow.
We are not.
Maybe a little bit. Maybe a little bit. We got the Pearl Dog in the house.
The Pearl Dog is in the house. I can confirm. He's here.
Right, bring him out.
We should bring him out. All right.
Pearl Dog.
Gentlemen.
Dude, you're like the Mark Zuckerberg of technical analysis over here. You wear the same hoodie like Zuckerberg every day, right? That's the move? That's the Perlman move? Or do you just have the 20 pairs of that one?
I'm a very simple person, and I have plain clothes. I don't have too many different things. I don't need them. I wake to sleep and take my waking slow. That's where I'm at, baby.
Deep.
This is actually, it's a great lead-in to my conversation today. Before I go there, I just want to give a shout out to Todd Sohn, because you guys were talking about him. You were praising him. You're loving him. And you were talking about his ETF, a half a billy. Sometimes the good guys win. Sometimes the good guys win. Sometimes you could be a good guy and you can win. You don't have to be a dick. You don't have to be a criminal. Good guys can win. He is a living example of that, and it's fantastic to see. I love the guy, and I love to see him crushing it. That's all. It's all there.
Yeah, great. Chris Verone too. You know, great. Couldn't be happier for him. You know who else? Perlman. Here's another one. Since we're giving shout outs, here's another great story that we have to talk about. I know you'll appreciate this. Slide 10, guys. This is so great. This is so great. I looked up the total assets of this ETF last night, and I couldn't take the smile off my face. Perth Toll pushing $2 billion in assets. This ETF absolutely crushing it. This has been the only emerging markets ETF that's been working out there. Nothing has done this well, pushing $2 billion. Speaking of good guys winning.
Speaking of good guys winning, and if you got that social justice bent, and you're sitting around on Twitter just tweeting about it, go put your money where your mouth is. Go do something about it. Make an investment in that area rather than just talking about it. And what Perth does, I mean, she's obviously super all class, all world, literally and figuratively, class wise. She gives you an opportunity to put your money where your mouth is.
Yeah, no, it's great. You know, you're not going to see any India in here. You're not going to see any China in here. These are, there's a lot of filters on how these companies and countries are picked, but it's really being driven by countries that are treating their citizens the best, right? And giving them a lot of the freedoms, hence the Freedom 100 Emerging Markets ETF. It's a lot of Taiwan, Chile, Korea, Poland, Brazil, right? Go check that out. Great, pushing $2 billion. Couldn't be happier for her.
We'll get Perth back on. We'll get Perth back on the show. It's been too long.
We'll give her flowers live on the show.
So today, here's what I want to talk about. There's an expression that goes, when you're in a hurry, slow down, right? When you're late, slow down. When you're in a hurry, you're already late. Slow down, because it's going to prevent you from making things any worse. And, you guys are on here, and investing moves very, very quickly. The market moves faster than ever. We're talking about Palantir today. We're talking about this Musk giant merger or whatever. It's the latest news of the day. I just want to take a deep breath, and I want to go back to what we talked about last week. When you're in a hurry, slow down. There is a joy of missing out. And so last week I was on here and we were talking about the silver trade. And we were basically saying, listen, if you're an investor, if you're a trader, if you're an active trader, you have a discipline, right? You have, okay, this is how I enter. This is what my risk is. This is where my stop is. This is what my goal is. If you're not doing those things, you got to go back to the drawing board. I mean, that's 101. That's basics of trading, of making money, of taking money out of the market, is having a methodology that controls risk and that controls how you approach, how you behave in the market, your entries and your exits on the profit and the loss side, right? And so if you are getting involved in the market, so last Tuesday we're talking, and silver and gold are going bananas. And if you are not in them already, you don't have a good entry point, right? I mean, if you're not in them on Tuesday, there's already a parabola, right? It's already going like this. There's already, what do they call it? Is that parabolic or asymptotic? The slope is over.
I don't know what the word asymptotic means, but I like it. I think I'm going to start using it. Just because it's asymptotic. It's
asymptotic, right? Asymptotic.
Yeah,
no, it's not. It's an asymptote. Phil was right. Asymptotic.
I don't know
what it is, but I like it.
All I know is if you're looking to enter, there were so many people, the volume was going ballistic on the buy side of silver on Tuesday, a week ago. Look at the chart and look at where that was. There was 0 people entering that. There's 1 billion people entering that trade, and there was 0 of them with a defined entry that was a part of some rational methodology. 0. Nobody was getting, I'm going to buy the thing when it goes vertical because I want to catch the downside. You know what I mean? I mean, maybe there were some people approaching it on the short side who do that
100%.
for a
I mean, we were
living.
talking about it here on the show. I didn't short it, but I'm like, hey, it's coming. It's coming. It came that day, but I didn't know that.
It's coming. The timing, and I'm not a market timer. I have no idea. I mean, I have eyes. I've been around. I have pattern recognition skills. I've seen things a million times. That's all I have. But I do know that the volume there was crazy, and I just want to revisit this. Right? I'm not taking my flowers now or anything like that. I am reviewing it because I want to slow down, and I want to just review what happened last week. This happens all the time. It happens in smaller, different ways. It happens in the market. It happens away from the market, right? You break up with some girl and then you see she's doing great, or you break up with some guy and then you see he's doing great, and you got that FOMO, and all of a sudden you're going back and it's over. It happens in a million different ways all over the place, not just in the market. But I just want to go back. If you have a methodology, that's your methodology. And when you're ever breaking your methodology, even if you get lucky and win, you have to go back. You have to take a deep breath and you have to slow down, right? You're late. You're in a hurry. You take a breath and you slow down. You do exactly the opposite of what most people do. And you look at yourself and you say, why? What is going on here that I behaved in this irrational manner, so that I don't do it the next time, so that I don't behave that way the next time?
You have to behave irrationally to understand that. Like, you have to look back and be like, yo, when I was day trading the double short ETF in the fall of 2008, before the triples existed, the SKF, right? If you know, you know. If you're day trading that thing and the double leveraged diamonds, remember that? I mean, I was doing all that stuff.
No.
I was day trading natural gas inventory releases on Thursday mornings.
How about the Phasmobile?
But I was trading these things before the Phasmobile. Then the triples came out. Nobody trades the SKF anymore. Nobody even knows what that is. But if you know, you know. I was there. I was taking profits on it the day that Bear Stearns went under, believe it or not. That's how long I've been trading that thing. Haven't traded in a minute. But you know what I'm saying? Like, you have to live through it. There's no way to go through life day trading natural gas inventories on Thursday mornings. Like, that is no way for humans to live.
The EIA report, the one that comes out every week.
We got the oil on Wednesdays and the natural gas Thursdays, right? I used to trade that.
And the Baker Hughes rig count.
That one I never traded. That one still is very confusing to me.
Okay.
There's no end of junkies out there, Spencer.
But you got to be a junkie and feel it. You have to be losing sleep at night to know you're too big. Like, you have to reach those extremes to actually be able to understand your own behavior. You have to live it, no?
I think 98% of the people have to live it. There's a tiny fraction of people who learn by the mistake of others. But 98% of us, in fact, it's not even 98%. It's like 60% learn by our own mistakes. And then there's 38% who just never learn. You know what I mean? So it's like 58% learn by our own mistakes. That's the people you're talking about. Maybe more, maybe 65%.
But you're probably right there, because there's some lessons I learned. Like, early on in my career, I was watching these guys blowing up in biotech stocks going in for FDA approvals. And these announcements get put out at 2:00 in the morning. They wake up and they're completely blown out of their positions. Like, so I've never done that.
Right.
Not even once. So that's actually a good lesson that I learned by watching other idiots that I've never done.
And there's also a survivorship bias. I mean, people who have been in the market for a long time and involved actively in the markets for a long time, there's a reason why they're still standing. So some of them have learned from the mistakes of others and learned from their own mistakes early on. If you're repeating the same mistakes over and over again, go find go think about what your major was in college and go back and do that. There's plenty of room for great accountants out there. And I'm not dissing accountants at all. It's a great craft.
I love it so much.
It's a craft, But go back and do that if you're having trouble with your behavioral part, because you could be the smartest person in the world and still make the same mistakes over and over again. If you're making the same mistakes over and over again, that's why I'm pointing this out about the silver thing. If you are getting in on it on the long side where the slope is going like this, show me the method. Show me your trading strategy. Show me that write-up of your entry, because there's none that you have. I'm sure there's none. That's why I'm bringing it up, because I saw the volume, so that I know at least some people watching this today were involved with that. They were involved with the FOMO.
Yeah, there were blowups. You saw it because you don't get that parabolic move without blowups. I mean, the blowups are causing those making that market move even more, which causes more blowups. It's a domino effect, and you see it. We've seen it a million times.
Perfect, and it's symptomatic, and it is your example of the global financial crisis was perfect because you saw the exact same thing.
Yeah.
You saw, there would be like this huge volatility in a sector related, in an industry related to finance. And then the next day you would hear about some fund blowing up, and then another fund would blow up.
Yeah.
Right.
I want to give a shout out to Pearls. I hate being Mr. Workout guy, like the CrossFit people. All they do is talk about CrossFit, right? So I'm not one of those guys. But I will say with this, and I was telling Perlman yesterday, I'm turning 44 in next week, actually. So, I want to do, I've been doing more legs, and, I've been doing the machine. I got to tell you something. Of all the changes that I've made in my life over the past, 5, 10, 15 years, one of the biggest impact, immediate impact on my feelings, on like how I feel, is this abductor machine. Right? What is it called? I always have to look it up because I forget. I think it's so dumb. It's the abductor and adductor machine.
It's both.
It's asymptotic.
Yeah, it's what it is.
When
it's
you
both.
Open,
it goes in and it goes out.
You're opening your legs and you're closing your legs. I got to tell you, I just started doing it like once or twice a week, like maybe 2 months ago. Holy crap. Like the immediate impact on just my day-to-day, not that I was in so much pain or anything was a problem. I just feel stronger and better, really, right? It's not so much like, right? Like I'm making a higher high here, but it's very powerful. So I just wanted to throw that out there.
Great.
Good.
Machines are underrated. Like you get all these gurus and they're like, oh, steel, and you got to lift the weights and you got to use real weights. The machines are great for intermediate and below, and they're great for advanced too. And they reduce injury risk because you have so much more control over the weight that you're moving. And they reduce some of the movement gains, some of the balancing gains and the small muscle gains slightly. But for the most part, they reduce injury risk a ton.
But that
and they allow you to work muscles, to your point, they allow you to work muscles that you don't usually use.
Yeah, because how else are you going to do those exercises? I don't even know. Like, I'm sure there's some kind of way, but like that makes it so much easier.
Right. Shout out to machines.
Shout out to the machines.
Shout out to the machines. They're great.
Bullish machines.
All right.
Bullish machines. Want to do a little recess and get out of here, girls?
Oh, sure. Yeah. Let's do some recess.
All right, we have Phil Perlman, so I wanted to have this conversation. I know Steve's got the open bar coming up, but I wanted to talk to Perlman. Strazza brought up the Denver cuts. We make strips here. We make skirt steaks here. We make oxtails. We make ribeyes. Oxtails is a different animal, but in terms of grilling, right? Grilling steaks. You can marinate it. You can not marinate it. Grilling steaks. What are you doing? You're doing a ribeye, right?
I think you're doing a ribeye. I mean, you just keep it very simple. For me, it's almost anything, but top choice ribeye. Love making good burgers. Don't sleep on a great burger with all the, pickles and bacon and cheese, and all the fixins and all the condiments. But a ribeye, I mean, it's classic. You don't need anything. You need a grill. You need some butter. You need some salt.
Strazza's bullish to Denver's.
If you're eating Wagyu, the ribeye can simply be too much fat content.
It can be.
Is the thing.
Yeah.
Right. So I agree. If you're going prime, if you're keeping it domestic, ribeye, strip, fantastic. The Denver is a great underrated cut. If you're doing the Wagyu, it doesn't give you too much fat.
You're
It's
doing
like a nice
Wagyu
little middle
Denvers?
ground between the ribeye and the fillet.
Hold on, you're doing Wagyu Denvers?
Yeah. It's like one of my favorites. And look, it's like the perfect little size here. I mean,
Where are
get
you
a nice
ordering them
little
from?
Bubble
The
Bebo?
Snake River?
This one is actually from
Denver.
Alpine Butcher.
And how do you cook? How are you cooking that? You cooking that in a pan, or you cooking that on a grill?
Hot stone.
Hot stone. Beautiful.
Hot stone,
hot
huh?
stone.
You stop cooking them in the microwave like I told you?
If it's a small enough cut, you can do the hot stone. Sometimes we'll sear it real quick on a pan and then hot stone it to kind of like move the process along. But the great thing about the hot stone is like you kind of eat as you go. And if you know, you
Oh, so you're slicing them and then stoning them. You're slicing and stoning?
Yeah, it's a blast. You get a little salt, you know, a little steak salt. You throw a little butter on, make some
Well
broccoli.
done, sir. Well done.
We do little portobellos too. We'll slice the portobellos, throw them on the hot stone. It's fantastic. It's a lot of fun.
And
Can
the
you send me which
spiritual
hot stone you have? Send me which stone you have. I don't have a hot stone.
I will. It's great. I mean, it's one of the best.
I only do it at restaurants. I don't do it myself.
Dude, I remember doing it at your house once.
Yes.
We had somebody come in. Remember we all went to JC's.
Yeah.
And he had like these chefs. It was so
remember
ridiculous.
JC at the Airbnb?
It was in the middle of COVID.
Yeah.
It was it was JC got an Airbnb out in Pennsylvania, and we all went over there, and he got like chefs come in, and we had the stones and we had the sashimi. It was ridiculous.
And then I got kicked off of Airbnb. That's the house that got me booted off of Airbnb, by the way.
One of them.
No, because Giancarlo left the door open. And then we sat on a chair, and the chair broke, but that wasn't my fault.
JC walked through this house. He entered 3 rooms in about 15 seconds, broke everything in each room.
It
was like the fucking Rolling Stones. It was like
like
fucking Keith Richards back in the 70s.
Everything he touched just started falling apart, dude.
Remember that?
Yeah, that's great.
That was ridiculous.
John Carlos set you up.
All right, let's wrap this up. Strazza's got to go. Coming up next is the open bar with Steve Strazza. If you're annoyed that we didn't get to like AMD or Teradyne or any of these movers, that's what Strazza's going to be hunting for, trades on those stocks coming. If you're watching us on YouTube, this stream will end. It'll automatically take you to the open bar starting at 10 at 10. Strazza, we'll see you there.
Great. Special earnings edition today.
Earnings edition. All right. That's it for us. Thank you to Phil and to Todd and to Kenny and to everyone in the chat. Go make some money. We'll see you around. All right.
Adios.
Adios. Thanks, Phil.
I can't take no loss. I don't even know what it costs.